Good morning, traders. It is Monday, February the 11th. Taking a look at the morning charts. This is the 4-hour chart of the US dollar index. You can see we came down in that green support zone. We've seen a really strong bounce ever since then. We have broken a previous pivot high, which starts to give a little bit of power to this move. We do have a little bit of a rising wedge here, which we could see it pop and actually squeeze higher. And the US dollar has really put in a strong bounce here. And overall, we're trading it in a sideways range, and if we were to just draw a trend line down here, we're kind of trading at resistance at this overall Fibonacci zone here at a down trend line. We've had a nice move up, consolidation, about equivalent size move up. Usually a pause or a bull flag is usually the halfway mark. So if you just see this run, pause, run, we're trading pretty much the next measured move. So a consolidation here, which if I just clear the chart, you can see we've had a little bit of a consolidation, and again we're at this down trend line. So wouldn't be surprised if the dollar has a little bit of problem here, but overall this pattern looks as though it still wants to pop and squeeze higher before it has a sharp pullback. And usually a higher dollar isn't strong for stocks and commodities. Although the dollar's not affecting equities too much, it is having putting some pressure on precious metals. Now if we zoom way back on the dollar index chart and go way back in time here, you can see we've got this huge range. This is going back to 2008. And really we've been in this halfway point kind of consolidating here for about a year, and it looks as though the US dollar index has the potential here to start to break out of this little bit of a consolidation. This type of pullback, this pullback and kind of bounce consolidation, very similar to what we saw here, a bounce and another consolidation, had a little mini head and shoulders here, and we saw it continue to move higher. So I wouldn't be surprised if we see the US dollar break out and continue to move up, but we'll have to see if it can break above this upper trend line, and then as it starts to break above that trend line, there will be levels of these previous pivot highs where stops will get run. If it breaks above this upper red box, then it will also trigger more stops. We'll see the dollar probably come back up to put in either a double top or continue to rally higher, which obviously isn't good for precious metals. Now if we just jump to the precious metal charts real quick, here's the 4-hour chart of gold. You can see it's starting to pick up speed to the downside. It's down almost 0.6% this morning, which isn't huge, but overall the pattern is still a series of lower highs, lower lows. If we jump to the daily chart, you can see it a little clearer. We've had a nice pullback, nice multi-wave. So far we've seen it more or less a 3-wave pullback. We've got 1, 2, 3, and the question is this forming a little tiny basing pattern? We're going to see it take off, or is this going to be 4, 5? We push down into support, run this green support trend line, this previous pivot low. We see a 5-wave correction, and then from there possibly see some type of bounce. Now again, if the dollar continues to move up, we're going to see the gold here looks as though it's starting to break down this morning below this support trend line. We could really see it give way down to the 1640 or lower, and if things get real ugly, we could see it come right down. I could see it tagging the 1600 mark within a day or two, depending on how the price action unfolds here. Looking at silver, similar scenario. Overall, this is the 4-hour chart. Overall, the trend is down. You can see how it's starting to lose momentum and starting to pull back. Jump to the daily chart. The pattern actually shows a little clearer. We've got so far a 3-wave. It looks as though we could see it continue to extend down, and silver could get pretty nasty and come all the way down to the 29, possibly even the 28 area, and really do some damage to the chart here. But overall, gold and silver are still holding up fairly nicely in the big picture, but overall I think we could see them both still pull down and possibly touch these previous pivot low levels. Looking at gold miners, here's the GDX ETF. They've been under serious pressure, not really giving any real strength. It looks as though they want to continue to head down. You can see you get these big waves of selling, and really all we have here is another bear flag. Got to move down, and a bear flag, and that points to much lower prices again. So gold miners, while they're they're starting to look good down at these lower levels. The charts are still pointing to even lower prices, and we really need to see a basing pattern form or some type of bullish pattern, but it's nothing but bear flags, and any rally in gold miners are just getting stepped on and crushed. So there's some big money unloading gold miners on every pop, and we don't really want to get involved in them just yet. Looking at bonds, here's the chart of bonds. We've had this downtrend line for a while. This is a 4-hour chart. More or less, you can see we got a nice little kind of rounding formation here. It has come down to a kind of a grinding halt. Instead of it really popping and rallying, it's really just trading sideways, and that's not a good sign. That's a sign of weakness. Usually you want to see it kind of pop up, and we'll see how things unfold. There is a potential for it to form a little basing pattern here. You can see we've got this kind of rounding bottom coming up, but overall the fact that it's moving down and kind of flagging, dragging sideways, when it hits this downtrend line over here, we could see it continue to move sharply lower. And of course, if that moves lower, that means money is flowing out of bonds and into the equities market. Taking a look at crude oil, here's the 4-hour chart of crude oil. This is zoomed way back. This is the previous high that we had back in 08 up at the 147 level, and the low down here at the 132-ish level. You can see we've had a nice move up, and really we're seeing crude oil has been kind of flagging here in this big pattern, really trading sideways right through the last major hiccup we had way back here, and right through the middle of all the noise. This pattern here is still very bullish, and really until we break these red support trend lines that run up this level here, once we break below that level or this green support line, that's when I think the momentum will shift from kind of going up to more or less sideways to actually down, and we could see a sharp downtrend in oil. But we are a long ways from that. This pattern overall is pointing to still much higher prices, and we could see it go back up and continue much higher than what people really want to see, which isn't good for the economy. But the pattern here is showing that it's still bullish. It is at the resistance zone, a couple red lines here, the Century 100 number, and so it is getting squeezed into the apex, but overall the pattern is still bullish until it starts to break down. Looking at natural gas, here's the natural gas chart, and this is zoomed way back into 2009. You can see we overall a major sell-off finally started to form a little bit of a basing pattern. We had this previous spike back here, and then we came down, and the market kind of bled lower and made a typical bottoming formation where it kind of just drags out, and really it becomes just oversold. Anyways, we started to form a little bit of a basing pattern. We've had a break above that, found a bounce, continued to move higher, and now we're flirting with some support trend line here, and flirting on a breakdown. If we zoom into this price action, overall this chart here is looking at just going from these bottoms here, this green line. You can see we're trading near a support zone this morning. Natural gas is down 1.6% this morning. It looks as though it wants to continue to head down. The next key support zone is going to be around the 280. The 3 mark will work as a natural support. There should be some type of bounce off there. It is a whole number. Naturally, people will have orders set to get in if it gets back down to 3. And also that 3 level, we've got this gap fill. We've got this big gap down here, which we did have a spike in pre-market trading there when we had fiscal cliff news, but overall that was in pre-market. We really want to see in regular trading hours the volume get cleared and come right down, fill that whole gap. We did get some of it here, but there is more potential. So really the 3 to the 280 mark is, if this breaks down, we could see it stretch right down into that zone. So overall, I'm not too bullish on crude oil yet, or sorry, on natural gas. I think the chart is pointing to either sideways chop, or it's going to continue to break down. Don't really want to get involved with it just yet. Looking at the SP 500, the equities market continues to stretch up. Really, we haven't had any of these pullbacks. We had a couple pullbacks back here with the fiscal cliff news, but we didn't want to get in front of it. And of course, it more or less gapped up and has continued to run without any proper pullback. It's just kind of a gap and go. It's starting to get a little more choppy here. We were very close to having a couple signals the other day on a couple of these pullbacks, but just didn't quite make it. and we continue to push up to new highs, and it's just a matter of time before we do get a pullback. Now the pullback will be somewhere down, if we do get a full pullback into this green box somewhere down here, so we've got a potential for a pretty decent pullback, but really the market is just continuing to move higher. Any minor pullback is just getting bought right back up. So as much as I hate to buy a market that's running away and taking off, if we do get a very close to a buy signal where we see some panic selling step in and we dip down to the lower end of the range, we may nibble on a small position, just because this market could continue to work its way higher without a significant pullback for, it really could do it for a long time still. So when bull markets run, they can run, and when they do buck, you will see a very sharp spike, at which opportunity we'll be looking to get in and add to different positions on a sharp pullback, because usually they whip back and continue to rally after that. Looking at the futures chart of the SP 500, this is the ES Mini. You can see here this was the fiscal cliff pullback, and then of course in one day it popped and then took off the following day again, and it really hasn't had any significant pullback. Starting to get a little bit choppier. Really we wanted to see a pullback below this green trend line. We just haven't got that. If we look this morning to see the price action, on Friday we had early morning pop. It kind of flagged sideways all day, and we're seeing it move a little bit higher this morning, but pretty much the market's flat at this time. So we'll see how things unfold today, and hopefully we'll get some opportunities to get some long positions. Because that's it for now, and I'll talk to you in a bit. Bye-bye.